Hello, this is Mike Swanson, Wall Street Window. I'm speaking with a very special guest today. I'm speaking with Jordan Roy-Byne, who runs the website, thedailygold.com. How you doing today, Jordan?
Hey, Mike. I'm great. Thanks for having me on.
Yeah, it's been a couple weeks since we last talked. Before we get into the gold action, first, I want to ask you, last week there was a Sprott investment conference specializing in gold, specializing in mining stocks, specializing in how to make money in all of them. So I'm curious, I wasn't able to go there, and what did you see there, and what was the sentiment at the conference?
Well, Mike, the sentiment was probably cautiously optimistic.
Okay.
There weren't everyone's convinced that we're in a new bull market, and I'm sure you agree with that. But people are still cautiously optimistic because we've had basically a V-type rebound with very limited corrections. And so people are a little cautious. They don't want to get too bullish yet. Looking for any deals out there. It's hard to find any deals because things have gone up a lot. The people that I've talked to, and this is something that I've been thinking, the real value right now in the space is actually in the riskiest part of the sector, which we're talking about. I don't like to use the word penny stocks as they're not really penny stocks, but we're talking about exploration companies. Think of things with a market cap below 40 or 50 million. Those types of, I don't want to say nano caps because that's a bit too small, but really in the tiniest of the micro caps. And there's tons of these companies out there, and you really have to sift through them to find where's the value, where are the credible people with credible projects, and those types of things. So that's something that I've been thinking about the last couple of weeks, and just having talked to a couple of my contacts there, they had the same view. So now that doesn't mean you're not going to make money in the mid tiers or the larger juniors, because I own a handful of those myself, and I'm not planning on selling those anytime soon. But just if you're looking at putting new money to work, the real best value in relative terms is really the tiniest stocks, and you're almost, I don't want to say you're in gambling territory with those types of stocks, but in many cases you are. So that's kind of the interesting thing, that the absolute riskiest part of the sector, that's where the most value is right now, just because everything else has gained so much in the last 6 months.
Well, I saw two previous cycles for gold stocks to be in a bull market, and what seemed to happen was the big caps would lead at first, Newmonts and Barracks, but then at some point these more speculative stocks would actually perform better. So that might be what is starting to happen now.
I think you're absolutely right. I remember that the whole junior sector really didn't take off until 2002, 2003, at the beginning of that first cycle there at the turn of the millennium. The large stocks actually bottomed in late 2000. So it was a while before the entire junior sector started to really outperform. Right now we're seeing select juniors perform well, but yeah, I think we're going to see a repeat of that. And not to get too much into the broad fundamentals, but if you look at the track record of the industry over the last 15, 20 years, there haven't been enough discoveries and large companies because of the bad bear markets that we've had in the last 15, 20 years. Multiple times they've had to cut back their exploration. And so the money that there hasn't been enough money going, I shouldn't say that. There's been a lot of money going into the ground because of the strong metals prices. But the industry has just not really found anything. And the implications of that, it takes many, many years for that to come to fruition, but the implications of that will come to fruition in the next decade, the 2020s, and that's why right now these large companies, they have no choice, but they're just going to have to buy the best deposits. And we've seen a lot of takeovers in the last 6 to 9 months. We've seen like more than 5 that I can think of off the top of my head. And there's just, it's not like there's 100 assets out there that really are going to be taken over in the next year or two. Maybe there's 10, 15, or 20, and we've already seen 5 taken over. So, I mean, what happens a year or 2 years from now when most of the quality assets are taken over? Then, I mean, then the money is going to go to even more early stage things, where if something looks good and it's at an early stage, a company is going to have to take that over right away. Now, I'm not talking about right now. I'm just talking about in the next couple of years. So basically, to sum it up, I mean, things continue to look very positive for the sector, but I think the real value is really at the bottom of the food chain. And for those types of companies, the ones that really find the quality assets and really, you know, they have the best ground in the most prospective areas of the world. I mean, those are the companies that you're going to want to look at real strongly, because that's where you could potentially make 10, 15, 20 times your money in the next couple of years.
Well, there's one thing about this I want to ask you. And I've been buying some of these stocks too, and I bought one, like one of them I bought for like 10 cents, and today it's 22 cents, and it's only been a couple months. And that's a huge return. But the thing is, most Americans, they are very obsessed of GDX, JNUG, triple ETFs, and I don't think are very much aware at all that these stocks that we're talking about exist and that they can go up this much when they do go up. So for those kind of people, let me ask you, why should they buy into a junior mining stock when they can buy JNUG and see it go up or down 20% a day?
Well, because JNUG, you're going to get killed with the leverage over time. I mean, if you hold that now for 5 years, I'm sure you could make a lot of money, but you have to sell it at the right time. You have to buy it at the right time. And one thing I did, Mike, I looked at silver. I did this like a year or two ago, where I looked at silver from the 08 to 11 period, where it went from $9 to about 49 or 50.
Okay.
And I created my own 3 times ETF. And I forget because I don't have it handy. You know, I did the data and ran it in Excel. But, I mean, Mike, even though this thing went up a ton, I mean, it was 50 times or it went up 70 times or something like that, throughout that period, I mean, it had multiple 50, 60% correct, even a couple 70% corrections. Ooh. So, I mean, if you're buying and holding these 3 times ETFs, I mean, that is just really dangerous. I mean, there's a dangerous amount of volatility. It's so extreme. And if you're just buying one of these nano cap type stocks, now granted, I'm not saying, you know, put your money into anyone you can find. I'm saying if you come up with 10 of these, only buy the best 1 or 2 that you can find. I mean, that's my personal opinion. But, you know, if you could buy something like that, it's at 20 cents or 30 cents. I mean, there's no expiration on that. It's like an option that you can just hold forever. I mean, you can hold that for 3, 4, 5 years, you know, and you'll have a good chance to make a lot of money. Certainly it's going to be volatile, but it's not going to be as volatile as one of those ETFs. And, you know, each person has a different situation. So people really need to understand their situation, their goals, what kind of risk tolerance they have for their portfolio before they think about speculating in this area of the market. Because, I mean, it is a highly speculative area of the market.
Well, let me ask you this before you go, and that's the current action. I get emails every single week about gold. Many people, unfortunately, sold out before March when it all took off, and you know, and they haven't gotten back in yet, and they're looking for an entry point. Other people are predicting crashes. I get emails again once a week where someone's forwarding me something where someone's predicting a gold crash, and they've been doing this, you know, all year. Crash hasn't happened yet, but do you think there is a risk of a pullback here? So many people are calling for one, or hoping for one, I should even say.
Yeah, Mike, based on my work, I do not see I do see a risk of a pullback, but I think it's going to happen probably in Q4 and not in the third quarter that we're in right now. And the reason I say that is because if you look at GDX and GDXJ, I'm looking at a chart right now on my screen where what's happened in the last couple months is basically in May and June, the miners formed like an upward sloping inverse head and shoulders pattern. Now I know that's a lot to take on, but they basically formed a bullish consolidation pattern in May and June, and then in July they had a strong breakout move from that pattern. And at the end of July, what happened is the miners came back down and they retested that breakout. Like for GDX, the retest was at 27. I think GDXJ came down to 42 or 43. So, I mean, in the late spring, the miners were consolidating with an upward bias. They broke out into July, had a strong move, and then at the end of July, they came back, successfully retested that breakout. And also, they retested the 2014 resistance. I don't want to say it's a double top, but in 2014 you had two clear peaks in the miners. So the retest also retested that former resistance, which became support when we had the breakout in July. And so anyway, in the last 5-6 days after, or I should say the last 5 or 6 days, the miners had this successful retest. And since that point, over the last week, I should say, they've trended strongly higher. And they're kind of trading in the range of new highs. I mean, right now we have GDXJ at 50, GDX just below 31. And Mike, there's just where we are right now, there's very limited resistance. There's very limited overhead resistance. Like I'm looking at charts right now. As I said, GDX is just below 31. Basically, it's trading at a 3-year high. There's very limited resistance until we get to the upper 30s. And it's the same with GDXJ, which is trading at 50 right now. I mean, there's a little resistance at 51, but other than that, there's really no major resistance until we get to 65 to 70. And if you look at gold, I mean, we see the same thing where gold, it had the Brexit move. It went from 1,200. It broke above 1,300 during the Brexit, all the way up to 1,377. Then it came back down, retested the breakout. I thought it could test 1,280 or 1,300. It did not. It bottomed at 1,310 on that retest. And it came back up yesterday close to the high. But looking at gold, Mike, I mean, the only resistance we have is 1375 to 1400. So if gold breaks above that, I think gold can run to at least 1485 to 1500, potentially as high as 1550. And that, of course, would coincide, with the move I was talking about in the miners a second ago, how there's really limited overhead resistance. So to really summarize this long answer, I see a good probability that right now the miners over the next couple months could have a stronger move higher. And if I am correct and that happens, after that strong move higher, then we, at the end of the year, we'd probably see a big correction, maybe a 25-30% correction in the miners. And if gold runs up to 1,500 or 1,550, it could come back down to 1,375 or 1,400 or 1,350. That could be the correction early next year. And at that point, Mike, that would I don't want to say that's the last buying opportunity, but I mean, that would be kind of your final chance to get in at reasonable prices, because I mean, the next move would, that you'd see middle of next year, later next year, you could see gold go above 1,500 back to 1,700, 1,800.
Yeah, it's pretty wild times, and yes, I'm glad you said that, because my message to these people is, look, I corrected last month. GDX went below 28. That correction came, and now we made a new high. I mean, it's just like it just hasn't happened yet where it's fallen enough for people to want it to. Well, as we wrap up, could you tell people where to go to get more information from you and what you provide?
Sure, Mike. They can go to thedailygold.com. I write one free editorial per week. I post interviews like that there, and I also do some video updates that you're talking about gold and what I see, and I also post those on my website, thedailygold.com. If you're not on my free list, you can opt in there near the top of the page. You get my free book, which I put out last year, and I'm also going to do an update on that book, hopefully in the next month or two. And basically, with my free newsletter every weekend, I should say, I discuss, what articles I'm reading during the week, which articles I find informative, and then also I usually share a chart or two for my premium update and kind of give you a snippet, a little tease from the premium update. And yeah, you can subscribe to my service at thedailygold.com/premium. But if you don't follow my work, opt in for my free newsletter, and you can get a lot of free info and a sense of the work I do and how I do it exactly.
Great. Well, thanks for taking the time to talk with me and my listeners, and we'll definitely do a follow-up interview soon.
My pleasure, Mike. Thanks so much.